Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, we've got quite the handover from overseas. In fact, the US markets ended positive. You have Asian markets that are trading positive as well on those cues. And that's primarily, I think, you can say on account of the decline in bond yields, or rather the buying interest in bonds that is pushing yields down. And that's having a bearing on risk assets globally.
Absolutely. And you see, to include to that list, you have Europe as well, wherein you saw Stock 600, a close of almost 2%, I think, and this is the biggest gain that we've seen since the November 2022 as well. So across, Alex, yes, that positivity is there from a global market perspective. If we sustain with that, it'll be a good move, because yesterday's session as well, Nifty, a gain of almost 177 points is what we saw. It's actually breached its 50-day EMA.
And broad-based.
Absolutely. And you had the PSU Bank Index, which has seen a good reversal, which has come to the support of Bank Nifty in yesterday's session. If that sustains, it's going to be interesting. And you're talking of the IT pack now, because you have TCS, which reports numbers today, Infosys, which reports numbers tomorrow. So clearly, that will actually set the trend as well with regards to where IT sector as a whole go.
Absolutely. And yesterday, I think one of the big talking points was the realty pack, which ended with gains of about 3.75%. But at one point during the session, it was up over 4%. In fact, it gained the most in as many as 15 years yesterday, or rather, it hit a 15-year high. I must amend. It hit a 15-year high. It gained the most in over a year. And that is on the back of quite a few very positive updates from a few mid-cap names, the likes of Puravankara, for example. And we pointed that out on the program yesterday as well, having reported sales of more than 100% growth over the same quarter last year. And this is the business updates. So that's clearly something that you would want to focus on. There is a possibility that there is a fundamental uptrend building in the real estate space.
Absolutely. So again, we will revisit the real estate space with Saloni as well to understand as to how the quarter update has been, as well as what's in store, second half of FY24 basis. But let's head across to Agam to understand now what are the FNOQs pointing out towards, because clearly you have the PSU Bank, which has come to the rescue yesterday. Do you think it will continue in terms of today's session, which will help us move higher? What are your data points indicating, Agam?
Right. So, data points indicating a very sharp short covering. When we must remember that while option premiums were very, very narrow, that's also led to substantial spikes. It was also the Fin Nifty expiry yesterday, and we saw a considerable amount of spiking of both calls and put options in yesterday's day of trade, which actually triggered a lot of stop losses for a lot of traders who were in fact short options, or short gamma as they'd like to call it. That said, the short covering has come through, and we're looking at key levels, both the Nifty and the Bank Nifty currently managing to hold above key levels. So we've seen unwinding coming along. The Nifty futures open interest down by around 2%. So short covering there, and Bank Nifty futures open interest also down by around nearly 11%. Short covering seen there as well. One of the levels we're watching out for, as far as the Nifty goes, currently, and of course this expiry is going to come through tomorrow. But as far as the Nifty is concerned, it is 19,600, considering we moved above that mark and we've closed above that mark. So not only did we see unwinding in the 19,600 calls, but we also saw an addition in the open interest for the 19,600 puts, which means put writers have become active around 19,600. Moving on to the Bank Nifty. Today is that weekly expiry. 44,500 remains the key level, considering we saw the Bank Nifty close above that mark. And the real question is that where do we head from here? And these are the levels that we are going to watch out for. For now, 44,000 serves as a good support, so to speak. But this is still a bit far off, given we're not expecting a 1% move in today's day of trade. There could be, I'm not writing that off, but it's something that we're going to keep an eye on. But on the whole, short covering coming through, and consolidation continues on a relatively longer span.
So 20,000 not on the cards immediately, right?
Not immediately, yes.
Okay, all right. So that remains the same. Thanks so much, Agam, for bringing us those key details. Now, we did mention TCS at the onset, and the fact that it will determine the course of the IT pack as a whole and provide the initial indicators of how the Q2 has been for these IT companies. As things stand, of course, we have information about Accenture, and that is kind of muddying the water, so we don't know exactly what to expect. But Tushar is joining in to give you some perspective as to the key points to bear in mind in the numbers today. Tushar, good morning, and what are you looking forward to?
Good morning, Alex. Good morning, Hiral. The 5 key things that we should look at TCS second quarter results today. Keep in mind, whatever happens, it's a given that we are looking at a subdued or a muted quarter for TCS. Okay, the 5 things that we have to keep in mind is the big numbers, the top line, the bottom line. The revenue will grow less than 1% sequentially. The profit may rise by around 3% sequentially. But investors will be more keen on looking at cues at what the management say as far as how the rest of the fiscal will pan out. And as like you mentioned, Accenture has already muddied the waters, so we are looking at a painful FY25 as well, at least the beginning. We're also looking at deal making. TCS signed some mega deals in the past quarter. There was a deal with JLR, there was a deal with UK's Nest pension scheme. Okay, the big deals are still coming in, but the big question is discretionary spending. Is it coming in? Because the big deals have come with a longer period of time, come over a longer period of time. The discretionary deals are shorter. Those snap returns are still not coming in. TCS wants its employees, more than 600,000 people, to return to office immediately. That signals an end to work from home. While that will shore up your utilization level, it will also add to overhead costs. Next point to consider is the hiring plans. TCS was the only, among the top tier IT firms, TCS was the only net hirer in the first quarter with 550 people hired, net hiring. They expect the numbers will not be much higher in the second quarter because TCS will look to make the most of its bench strength that it has built over the pandemic. The last point, which is the most important point, if I may say so, is the buyback that is going to happen. TCS in March 2022 did a buyback of rupees 18,000 crore. It has now the leg room to do up to 22,000 crore. Now it remains to be seen how much the management is ready to stretch. Alex.
Right. Thanks to Shah for getting us the details. It's going to be interesting to watch out for in terms of TCS. And overall, if you talk about the IT pack as a whole as well, the key commentary that I've been picking up so far is that let's not look at FY24 now. It's time to look at FY25, wherein FY24 will be muted, but there will be some bit of progress that could come in terms of FY25 as well. So it's going to be interesting. And it's mainly the BFSI sector that is going to be under pressure. Sure. Though IT companies which have been catering to the auto space, they are expected to see a good pickup from a demand perspective. So let's see how all of this pans out. But apart from a TCS, we will be watching out for smaller names like a Delta Corp, Sami Hotels, Signature Global, Zaggle Prepaid Ocean as well. All of these companies that will be reporting numbers in today's session. So it's going to be an interesting day of trade to start off with in terms of the earnings season. But moving on from there on, a lot of other stocks that continue to remain in focus. In fact, real estate as a pack has been in focus, as Alex was mentioning at the start of the show as well. Clearly, it's the Q2 update that has been interesting. Commentary with regards to what is in store in the second half of FY24 is also apparently very crucial. In fact, when I spoke to the management of Ajmera Realty yesterday, they've clearly indicated that yes, the demand supply is absolutely intact. In fact, builders are of the opinion that let's not take price hikes because that's something which is auguring really well from a sales perspective. Let's head across to Saloni, who has all the number crunching in terms of what the sector has in store to give us more. Saloni, good morning. What do you have for us?
Operational updates from multiple companies for the second quarter of FY24. The gains were led by multiple players, with a few hitting 52-week highs on reporting highest ever quarterly sales numbers. One of the stocks that stood out in trade today was Prestige Estates, which rose more than 10%. The company reported its highest ever sales of over Rs 11,000 crore during the first half of FY24. Its quarterly sales also more than doubled to over Rs 7,000 crore. Shobha also added to the list of gainers in the realty pack. The stock witnessed a jump of over 6%. Other property stocks such as Godrej Properties, DLF, Oberoi Realty also jumped significantly on healthy business updates. The Realty Index remains to be among the top performing indexes this year as analysts remain bullish on the sector. They expect the sales momentum to continue for the major developers and not just only for this year but also for the next 2 to 3 years. There are also expectations of improvement to be seen in pre-sales numbers across the key players. The industry data also seems to suggest that the momentum in sales and launches have been healthy, which is leading to a strong guidance by the companies. Stay tuned to BQ Prime for more.
We have in mind also that the all-important festive season is very close, and we'll have to see how all of these real estate companies report sales during that period. But let's focus in on a couple of other stocks, and MCX, of course, has been in the news for the last couple of weeks, on and off, because on the one hand, it announced the launch of its commodities derivative platform, only to be stopped short by the Securities and Exchange Board of India, and then finally the green light has come through, and they've announced the date for when they will start this platform. We've got Saloni joining in to give you some perspective on what this means for the company. Morning, Saloni. What do you have for us?
Morning. So as you rightly said, MCX is one stock that has been on the news, and it has risen over 7.3% in the past 1 week itself. It's on the back of the news that it will go live with the new commodity derivatives platform on October 16th. That is days after SEBI gave its approval. So previously on 29th September, SEBI had asked MCX to delay the launch of the platform, which was scheduled to go live by October 3rd initially. Then on October 8th, SEBI obviously withdrew its abeyance order. The exchange has also planned to conduct mock trading on October 15th in order to allow members to participate and validate setup and connection during the mock trading session. The company has also informed all of its members that all of the pending orders at the end of October 13th will be cancelled due to the release of the new platform. And shares of MCX closed 1% higher at 2,098.7 apiece yesterday. That was ahead of the announcement.
Right. So all of these will remain. I mean, MCX will be in focus, and if it's been a volatile ride, but it's still in the positive. If you have to take the performance over the last couple of trading sessions, and with the date coming out, probably it will be one of the candidates that could see a positive move in today's session. Thanks, Saloni, for getting us the details. Moving from MCX, a couple of other names that are in focus, but one stock that Mika is going to highlight for us is the JK Tyre. It's interesting to see how tire makers have been progressing, and with the auto sales numbers that have been on the rise as well. As we know, it is one of the key beneficiaries, though it is a sector which gets impacted with higher crude prices
Because of
as
carbon
well.
black.
Exactly. So a lot of things brewing there. However, you've got one coverage that has been initiated and a good target price on the counter. Mika has the details for us. Mika, what do you have for us in terms of JK?
Yeah, good morning. So MK has reinitiated its coverage on JK Tires with a buy rating at a target price of 415 rupees, which is a 55% upside. The brokerage believes that the stock's price can potentially double over the next 3 years and estimates an 8% revenue and 58% profit after tax CAGR over FY23 to FY26. It also states that sizable deleveraging on behalf of the company can boost its FY26 return on capital employed to 21% and converge JK Tyre's valuations towards the large peers. Now, the tire industry has been structurally improving on the back of truck, bus, and passenger car radials imports decreasing with over an 80% drop since FY20. Furthermore, export competitiveness in India has risen due to the labor cost advantages, and the industry has seen controlled capex, mostly in the form of brownfield expansions. Now, MK expects a stable to positive medium-term growth for the industry and a 7% volume CAGR till FY26. Amid the structural changes, JK has been outperforming its peers over the past 12 months, while it's underperformed by 20% during the span of FY 2013 to FY20. And MK believes that this outperformance is set to continue, driven by the company's efforts to win high growth, high margin segments like PCR, SUV tires, and exports. This sustenance will be driven by research and development. The firm has overcome the gap against its peers with multiple initiative launches. Furthermore, the company has also expanded its distribution over 60% since FY18 and reviewed its marketing spends towards branding rather than short-term promotions.
Okay, I was just looking at the share performance in the year-to-date period for the likes of MRF, the likes of JK Tyre and SEAT. JK Tyre, as you pointed out, has beaten its peers quite handily, growing over 40% in that time frame. CEAT, by the way, is also an outperformer, gaining about 27%. But let's focus on a couple more stocks, and this is on the back of business updates. We've got NCL as well as Ugro.
Yes.
Yeah.
So Ugro Capital has reported their business performance details for Q2. Assets under management have grown 73% YOY and 12% quarter on quarter and now stand at 7,590 crores. The gross loans originated during this quarter was up 50% year on year and now stand at 2,500 crores. Unsecured prime loans constitute the largest portions of the asset under management portfolio at 31% versus 2% a year ago. Versus 29% a year ago, while supply chain financing accounted for the highest proportion of gross loans originated this quarter, standing at 45% versus 37% a year ago. The company's total debt this quarter also stood at 3,800 crores and is up 13.7% quarter on quarter. Simultaneously, number of active lenders in the book stands at 62 versus 60 last quarter. The company has a target of 50% off book AUM and has achieved 45% this quarter versus 43% last quarter. The stock is down 9% this month, but up 80% year to date. And according to Bloomberg, all the three analysts tracking the stock recommend a buy call and have a 31% 12-month return potential. Next, we have NCL Industries. They have come out with their production and dispatch details for Q2. Cement production is up 9% year on year at 6,59,300 megaton, while cement board production is up 12% year on year at 21,509 megaton. Cement dispatched is up 11% year on year at 6,69,587 megaton, while cement boards dispatch is up 9% year on year at 20,239 megatons. Dough production and sales are up 23% year on year, and RMC production and sales are up 50% year on year. The stock performance is down 4.8% this past month, but up 23% year to date. And according to Bloomberg, the only one analyst tracking the stock maintains a buy call and estimates a 35.5% return potential.
Right, so these are interesting names we will be watching out for as well in terms of the cement player as well as Ugro Capital. Thanks, Mika, for getting us the details so far. But moving on, a lot of other names that continue to remain in focus, Alex, in today's session, which are names that have been picked by Varsha today this morning. Varsha, good morning. What do you have for us?
Good morning. So let's see the stocks which are in focus today. First, we have Birla Corporation, where company is facing 8.42 crore penalty for excess limestone production in Madhya Pradesh in the period 2001 to 2007. Now, company did not obtain environmental clearance during that period due to the ambiguity present in the provisions of EIA, but it did maintain valid consent to operate its mine from the State Pollution Control Board. Upon receiving the order from the Officer of Collector, Birla Corporation has initiated a review of the situation, and the company is evaluating its next steps in response to this development. Then we have Thermax. Now, there was a matter of arbitration between Thermax and a customer. So on 6th June 2023, Thermax was directed to repair and reinstate 2 gas turbo generators at customer's plant. Now, company had filed an appeal before the High Court against the award passed by the arbitral tribunal. Now, in this regard, the stay of operation and execution of the arbitral award has been granted, subject to company depositing an amount of 218 crores, which is returnable with interest. Now, what is arbitral award? Is award granted by arbitrator in their decision, where the award can be money one party has to pay to other, or it can be non-financial awards such as stopping certain business practices. Then we have Apollo Microsystems, where trading approval of 6,66,000 equity shares, which was issued and allotted on preferential issue basis to the non-promoters, they have been granted by NSE and BSE. So these equity shares are listed and admitted to dealings on the exchange from October 11th. Lastly, we have Crompton Greaves Consumer Electricals, where the company has launched a new product in the storage water heater segment. Now,
the good point, the good thing about this company is they're focusing on premium products, which will aid their margins going forward.
Interesting. Thanks so much, Varsha, for bringing us those updates. Another industry that is seeing significant premiumization is the alcohol industry. And that industry, of course, is in focus during the World Cup in particular because of the event that
the
it
kind
is.
of consumption that they're expected to see. So I think all eyes are on your Radico Khaitans. In fact, we spoke with the management as well.
And that interview plays out, which is why I was bringing it up. That interview plays out at 11 p.m. today.
AM.
And,
Yes.
sorry, see, I'm already thinking about the weekend. But 11 a.m. Today, and you can catch that on the platform bqprime.com or in fact on any one of our social media platforms. But we're completely out of time on this edition of Trade Talk. Thanks so much for tuning in. And do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.